All right, greetings. So we're going to do question quickly on manufacturing accounts. And I'm just going to run through this one quickly. This is the format of the manufacturing account. This is what it normally looks like. You'll put the person's or the business's name. And remember that not all businesses buy their stock and sell. Some businesses actually, they would manufacture their products. And as a result, they would need a manufacturing account in addition to the trading and profit and loss account or the income statement. And as of such, we have to, draw up one of these. So normally what will happen is first you'll have your stock of raw materials that you would account for. Then you go on to get your direct labor costs, your direct expenses, and you get your prime costs. And of course, you're going to put in your factory overheads, otherwise called your indirect manufacturing costs. And those would oftentimes be appropriated some between the factory and between the offices. And they would tell you. And in the question, you would see, all right, and you go right down until you start to your TP&L that start at sales. And, the question we're going to do, though, will not have the TP&L aspect, but only the manufacturing account. So we will be doing up to right here. All right, so this video is just to do the question, and I can do another video that would basically flesh out and teach the manufacturing account separately. All right, so let's just get to the question. They factor their products, and as a result, they would need a manufacturing account in addition to the trading and profit and loss account or the income statement. And as of such, we have to, draw up one of these. So normally what will happen is first you'll have your stock of raw materials that you would account for. Then you go on to get your direct labor. So KC Garments made uniforms and provided the following information for the year ended December 31, 2017. So that's the first thing you need to put in your manufacturing account format. That gives you marks, right? And it gives you all the information here, the factory wages, salaries, the rent, electricity. So all of the different some information are right there for you. All right, go down. You have, so remember you have your stock of raw materials. You'll also have finished goods, if any, and also remember your work in progress. So you will have free stock within the entire manufacturing account. But for the manufacturing, this question will only have the work in progress and the raw materials, and you'll work to find the finished goods, which is the finished stock. All right, so scroll down. So it says 60% of the factory wages are direct, and the remainder is indirect. 75% of the factory rents will be allocated to the factory. The rest of the office will not be doing the office, I think. Right, insurance is divided 3-1, okay, and the depreciation is to be charged on machinery at 20,000 per annum on the straight line method. All right, so you are to prepare the manufacturing accounts for the business and label clearly the raw materials consumed, prime cost, and cost of production. All right, so let's get to this. So remember, your footnotes are always important when you're doing the question. So first and foremost, remember that you need to ensure that you label your account properly. So let's just go through this quickly. All right, so details of the sign and so on and so forth. Good. All right, so let's go. So the first thing we want to have now is going to be our stock, open stock of raw materials. And this amount is $37,000. We're going to then go on to add purchases of raw materials. I'm going to use RM, and I'm just going to use two columns. So it's 118, 500. Then we add the carriage inwards of raw materials, which was $12,000. So we deal with all the raw material before we move on. All right, and then we're going to less our return outwards of raw materials, and that was 18,200. And we're going to subtract that, so less, put it in bracket, 18,200. And then we're going to compute for this to see what you will get. And the figure we're getting here is 149,300. All right, so let's continue. To close our closing stock now. Raw materials, and that was 29,600. So in bracket, 29,600. We're going to subtract that, and then that should give us 119,700. All right, and this is the cost of raw materials consumed. So cost of raw materials consumed. All right, so let's move on. All right, so we want to go on to get our prime cost now. So the question is, do we have any direct materials, any direct expenses? And yes, we do have direct materials. So just put that there. The direct materials was 30,240. Right? And if you're asking how we get the direct materials, just remember, not direct materials, sorry, direct labor. Direct labor. And the direct labor was actually the factory wages, because this labor can be directly related to the actual producing of the product. And it is 60% of the factory wages. So it's going to be 60% of the 60% of the 5,040. So 60% times 50,400, you would get the 30,240. And then that would lend us to our prime cost. Right? And our prime cost now would, when we add those, we'll get 149,940. Just go with these. All right. So that's so far. Now we want to go into our factory overheads or our indirect expenses. So factory overheads. So we need to factor in all the different costs that are associated. All right. So let's go. So we had, just list them. We have indirect wages. Right, so factory wages, or let's just call it factory wages. It doesn't make a difference though, right? So we have also factory salaries. They are different. Remember that wages are normally paid weekly or bi-weekly, and they fluctuate. They can go up or down depending on how much production of the goods are completed, while salaries are monthly and they're normally fixed. Right. So it's the factory wages, factory salaries. Right. We had factory rents and rates, electricity, we have insurance. What else do we have? And we have depreciation. And the depreciation was on the machinery. So machinery at 20% per annum. So it's 20% of the amount for the machinery, which is times $300,000. All right. Insurance. What did you say about insurance? It was three, so it's 3/4. So three over four times the insurance figure, 12,200. Electricity. All right. So it's the same thing. 162, the rents and rates. All right. 75%. So 75% times, and the amount for the factory rents and rates was 35,600. I'm going to speed up this video so you can go through. All right, the factory size was just straight, but the factory wages was the 40% that was left off from here. So it was 60%. Just remember, and so this would be the 40% of the 50,400. All right, so we're going to compute and just put in these values now. So for this, I got 20,160. For the factory salaries, 125. Right, for the rents and rates, the 75% of that is 26,700. Electricity, right, was 162,400. Right, so 3/4 of 12,200 give us 9,150. And then the depreciation, 20% of 300, but that should be $60,000. Am I correct? Yeah, $60,000. All right. So now we need to compute these. When we add up everything here, the amount we get, we're going to put it over here, and the total is 403,410. So everything here adds together, give us this. This is the total of our factory overheads. And of course, we're going to add our factory overheads to the figure up here, which is our prime cost. When we add them, we get 553,350. All right. And that's the production cost that would have been incurred from the factory and the raw materials. But now we want to find the total cost for the production. So we're going to add our work in progress, which is opening. And the opening work in progress was 31,200. And less work in progress. What do I have working is work in progress. Right? Closing. And the closing was 36,500. And we subtract that from that. We add opening, subtract the closing. We get 548050. And this now will be our total production cost completed. Goods completed. All right. This part is the second part of the question right here that says, if the KC Garments produce 40,000 uniforms for the year, what's the production cost? And this is very easy, pretty easy math. So it is going to be, so to find the unit price, we're going to have the total cost of production completed divided by the number of units. Let me just give it some more space. All right, so that would then give us the 548050 divided by the $40,000, and that should give us 13.70. And that's that for this part of the question.